Before we get into today's episode, I want to share something quickly. After building my last podcast, The Health Formula Show, to over 400 episodes, I realized something pretty crazy. Over 70% of the people listening to it weren't actually subscribed. And that matters because if you're serious about learning, staying consistent, and actually applying what you hear, subscribing makes a huge difference. So if you're serious about investing, creating long-term financial freedom for yourself, and making smarter, more informed decisions, hit the subscribe button. It really helps the show, and more importantly, it makes sure that you don't miss what's coming next. If you're choosing property in Dubai based on what feels central, you are already playing the wrong game. Stay with me until the end because this mindset alone explains why some investors see outsized returns and others don't. And for those of you listening, this is a very visual episode, so I highly encourage you to watch this episode on YouTube. Now, when people ask me to explain Dubai, I don't start with neighborhood names, and I definitely don't start with what's quote unquote central, right? That framework only works in older, more traditional cities. Dubai needs to be understood through how it was built, how it expands, and how capital actually moves through it. Dubai didn't grow organically over hundreds of years. It actually expanded in phases, guided by infrastructure, highways, and long-term planning. And that changes everything, my friends. Dubai was essentially Bur Dubai and Deira back then. That was the city. If you look at the map, you'll notice something very important. It sits very close to the current airport, DXB. And at the time, that made perfect sense, right? Trade, logistics, very convenient. But Dubai didn't densify inward. It actually expanded outward, mainly south and west, following major transport routes. And this is why maps matter so much here, right? Because they don't just show location, but they are actually showing you a lot of intention. If you look at the map, you'll see how little was actually developed. Most of the city was concentrated in the north, around Deira. That was essentially Dubai. One main center, one direction of growth. But as the years went on, you can literally see the city expanding south, right? You see new districts, new infrastructure, new communities, and all of it happened incredibly fast. Now compare that to London. If you look at London over the same period, it really hasn't changed much structurally. Yes, prices have gone up, but the shape of a city is largely the same. The infrastructure is already there. The districts are already there defined. And that's exactly why investors have benefited so differently in Dubai compared to cities like London. And one of the questions that I get asked a lot is whether the growth of the UAE is one of the reasons investors are making more money here compared to places like London and other markets. And the honest answer is yes. Not the only reason, but a very important one for sure. The difference really comes down to whether you are investing in a mature market or a growth market, right? London is a mature, fully developed city. Most of its infrastructure is already built. Most areas are already established, right? So population growth is slower and large-scale transformation is very limited. That doesn't mean that prices cannot rise, but growth tends to be incremental. In markets like London, price increases are typically driven by inflation, scarcity, and leverage. You're not buying into transformation, you're buying into what already exists. Very different. Now let's bring Miami into the mix, for example. Miami is interesting because it has experienced strong growth. Population inflows, lifestyle migration, capital coming in from Latin America and the US in general, but structurally, Miami is far more constrained, right? Like it's limited by geography. It doesn't have the same ability to create entirely new districts at scale. Infrastructure expansion is much slower, more reactive, and often restricted. So while Miami has delivered appreciation, a lot of that growth has already been priced in, right? The transformation phase is far more limited compared to Dubai. Dubai operates very differently because it's still in a growth phase. Entire districts are being created. Infrastructure is built ahead of demand. Population growth is planned and incentivized. Economic sectors are being actively diversified. That means investors are not just benefiting from inflation, they are benefiting from value creation. Very different. And this is also why off-plan worked so differently here, because when you buy off-plan, you are entering the market before demand is fully realized, before transport links, amenities, and communities are complete. And so as the area matures, prices don't just rise, they reprice. And that kind of structural repricing simply doesn't exist at scale in mature cities like London anymore. And it's far more limited in places like Miami. So yes, growth is one of the key reasons investors see stronger capital appreciation here. Not because London or Miami are bad markets, but because London has already grown and Miami is much closer to maturity. Dubai is still being built. And this is where people often get stuck. Investors come to me all the time as well, and they're like, I want something as central as possible. And that makes sense, right? But that is their frame of reference. They're thinking in terms of like how cities work back home. In London, you have central London, East London, West London. In Paris, it's the same. All of these cities are the same thing. Dubai doesn't work like that. Dubai is not built around one single center. It's built around communities. And this is the part that most people don't understand at first. When you zoom out and actually look at the map, what you see isn't one core. You see highways connecting master planned communities, each with their own ecosystem. You have Dubai Hills Estate, you have Jumeirah Village Circle, you have Emirates Hill, you have Meydan, you have Sobha Heartland, District 11, and then you have Dubai Greek Harbor. These aren't less central areas. They are where people actually live, they raise families, and they create long-term demand. Historically, this is also where most of the real appreciation has happened. Downtown and Business Bay are already established. They are priced accordingly. They work well for short-term rentals. In the right unit, you might achieve 10 to 12%, but for long-term rentals, 4 to 5% is considered very good in these areas. Just like Prime London, you don't get outsized returns, right, by buying what's already finished. You get them by riding the wave from the beginning. And this is the key thing to understand. Dubai has deliberately created micro communities, each with its own lifestyle, purpose, and demand profile. There isn't just one center. There are many. So when you look at the map of the city, what you really need is an understanding of how these areas are connected, how they are evolving, and where demand is being built next. Because in Dubai, understanding the map is not just about geography. It's really about understanding where the future is being created. Now, the first major expansion followed Sheikh Zayed Road, and this is where Dubai built its global face. So think downtown, DIFC, Business Bay, Marina, JBR. These areas became the commercial, the financial, and lifestyle core of the city, right? They are busy, high demand, and fully formed. So when you look at it from an investment perspective, that's very important because once an area is complete, growth becomes more stable, right? But also way more limited. And that is why these locations tend to perform best for like short-term rentals, lifestyle buyers, rather than like outsized capital appreciation. Now, what most people miss is what happened behind Sheikh Zayed Road, because Dubai didn't just add more towers, it actually created entire master planned communities. And this is where you have Emirates Living, Dubai Hills, Meydan, Sobha Heartland, and District 1. This is where all of these come in. Now, when these areas first launched, many people thought they were like too far, right? But they didn't really move. The city expanded towards them. So this is where a lot of like long-term appreciation has historically come from, because investors entered before everything around them was finished. And then between Al Khail Road and Mohammed bin Zayed Road, you enter what I call the central suburban layer. And this is where Dubai becomes very nuanced. You'll find apartment-led communities, you'll find townhouse developments, and then you'll find villa-only neighborhoods, right? So think places like JVC, JVT, Arjan, Sports City, Production City, Town Square, Mira, and Mira Oasis. And each of these serve a very different lifestyle, very different tenant profile, and very different budget, right? And this is where generic advice really stops working, because you can't really judge these areas properly without really understanding who they are built for, what's still coming, and how infrastructure will actually connect them over time. And this is also where off-plan investing becomes very project specific. So as you move further out, density drops and land opens up massively, right? And this is where you'll find communities like Arabian ranches, you'll find Villanova, you'll find the Villa, and then you'll find Al Barari. And many of these were once considered like too far, but as Dubai expanded, they became far more connected, way more desirable. Like if you take Al Barari, right? Like this is a great example. And it's not central in the traditional sense, but it offers something very, very rare in Dubai. And that uniqueness creates a lot of demand. And then if you look at where the future density was reinforced, there's a clear spine that appears. So you have Meydan, you have Dubai Hills, Soba, and then you have Heartland. And Dubai Hills in particular shows how the city plans, right? You have villas, townhouses, retail, schools, amenities, right? And then you have the apartments later that are coming. And then we have the major mall to anchor the entire community, right? Dubai Hills Mall. And this is not accidental, by the way. It's all, sequencing. And then further out beyond Al Ain Road and towards Emirates Road, you reach what many consider the outer Dubai. So you have places like the Valley, you have the Mag Hills, and these areas often come with lower entry points, but they are not for everyone, right? Like they suit investors that have a longer time horizon and a clear understanding of how future connectivity will evolve. Because this is where strategy matters way more than hype. So Dubai South is, for example, a long-term play. Right now, it's relatively underdeveloped, but we all know about the relocation of the main airport, right, to Al Maktoum, which will be the biggest airport in the world. And we know about the scale of planned residential and employment zones, which make it strategically important because you can position yourself very early here. But that obviously depends, right, on your investment strategy, how you want to exit, etc. Because Dubai South is not for every investor. And a lot of people focus only on residential, but Dubai's economy is heavily driven by trade, by logistics and wholesale activity. And this is where Jebel Ali Port comes into the equation because it is a major contributor to GDP and employment, right, which feeds directly into housing demand. Then don't forget that waterfront freehold land is also very, very scarce, right? And that's why established waterfront areas are priced where they are, and why new waterfront developments attract so much attention. Always remember that scarcity matters a lot. It's one of the most important factors when it comes to like your exit strategy, all right? And something that you need to pay attention to is that yes, people ask a lot about metro access. It does matter, but it's not universal, all right? Dubai is largely car-led. The metro follows specific corridors, mainly along Sheikh Zayed Road and older parts of the city. And we have some future projects coming like the Blue Line, we have the Etihad Rail, which will obviously improve a lot of the connectivity, but this happens in phases. So don't forget that smart investors, they look at the planned infrastructure, not just what exists today, because you're buying for what Dubai will be in the future, not for what Dubai is right now. Now, this is a really important point as well, because understanding location is essential. You absolutely need to know where you are buying and why. And yes, they often say location, location, location. But if I had to choose between location and developer, I would choose developer every single time, because you can have two projects in the same area launching at the same time and still end up with completely different outcomes. Different build quality, different delivery times, different end user demand, different exit strategies that directly impact your capital appreciation and resale performance. So yes, location matters, but the developer and the specific project often matters way more. And this is a final point that I want to leave you with. It's one thing to understand all of this in theory. It's a completely different thing to implement it in the real world. Everyone's situation is very different. Time horizons, risk tolerance, capital structure, goals. And that is exactly why we work with people in a very personalized manner, based on their specific investment strategy, based on their budget. So if this has resonated with you and you want to think through what this could look like for you, the best next step is to book a private call with me. You will find the link in the show notes or just below this video if you're watching this on YouTube. If this episode was helpful, the next one you should watch is why international investors are moving to Dubai faster than ever. Because in this video, we focused on how Dubai works as a city and how to think about location, communities, and growth cycles. So I really zoom out and really explain why this shift is happening at all. That means why so many people from the UK and the US and other international markets are moving capital and sometimes their entire lives here earlier than they ever expected. We talk about the system behind Dubai, the legal framework, the tax structure, safety, enforcement, predictability, and why investing in property isn't just about the asset itself, but actually the environment that the asset operates in. So if you're curious about why Dubai is pulling investors in at this scale and what people often misunderstand before they move or invest here, make sure that you watch that next.